Hello and good morning. You are watching The Mining Show, brought to you by Blytheway on Core Finance. I'm Charlie Gibson. Now, as we know in the world of mining, sometimes it's all about the eye of the tiger, and you need all that strength, you need all that courage, you need all that power, as the Blake poem goes. Well, sometimes it's a minor, subtle change from the eye of the tiger. Sometimes it's the eye of the well. And if you're from Turkey, or you speak Turkish, then you'll know that the translation of that is Pinagazoo. And one company that has exactly such a project, which translates exactly as such, in fact, is Pasinex. And I'm joined by their chief executive now, Steve Williams. Steve, good morning. Thank you very much indeed for joining us.
And excellent Turkish, by the way. Good morning.
Thank you very much. Well, it is a little bit rusty, so I apologise if I got the pronunciation slightly wrong. But anyway, I hope it was close enough.
It was.
Now, you just had, this is your main asset, isn't it?
Yes.
Which is lead zinc in sort of towards the southern end, southeast corner of Turkey?
Southeast, part of Turkey. Just above where the Mediterranean Sea turns around and comes back.
Absolutely. And you just had your third quarter results. It's an operating mine.
Yep.
And you're also in the right place at the right time because, of course, zinc in particular is incredibly fashionable at the moment within the panoply of metals. So tell us about those third quarter results, first of all.
It was our best quarter. We put the results out this week, the beginning of the week, and after getting our 50, this is a 50-50 joint venture, after getting our 50% from the joint venture, after paying taxes, after paying our corporate overheads, we still reported a 1.8 million Canadian profit in Canada, Q3. The profit coming from the JV was something of the order of about 5 million Canadian, but after taking all these other things out, 1.8 million Canadian profit, nearly 2 cents earning per share. So we were very pleased. It was our best quarter ever. So yeah.
So best quarter ever. The market reacted in a slightly strange way by the looks of your share price graphs. So
yeah.
How do you explain that?
With difficulty is the truth. I mean, I was obviously looking for a positive response. I think, unfortunately, some people were anticipating that, and I think it was an opportunity to encourage, even though I didn't anticipate that myself, encourage some selling. So, I don't know. That's the market, unfortunately.
Right, so I suppose the counter side to that is, if you wanted to buy stock, it might be available out there now,
exactly.
And you can get it at a relatively cheap price as well.
It's a good moment right now.
Yeah, absolutely, because you've been range bound for a bit, and the sort of shares bouncing between 25 and 30 roughly.
Yes.
You can pick them up now at more like 25.
Yes.
And ride it up to
wherever you want. Where we go next.
Yeah, absolutely. But tell us the sort of the story, because you've got the producing mine, but there's an awful lot of focus, isn't there, on the exploration prospects as well?
Yes. Well, first of all, in terms of the producing mine, we did a lot of underground development last year, this year, and we've pretty much got the producing mine now to where we're going to be for the rest of this year and going into next year. So we've sort of set it up for certainly the next 18 months of production. So that was a lot of work. So that's sort of done now, actually, and that's enabled us to get back to exactly where you were going, which is the real big story is still the exploration upside. And there's two priorities for us. The first priority is to continue to find the roots of the system that we're on. We're still very early in. We found this deposit in 2013, 2014, so it's not too long ago. So we're still very early into it. And these systems can run deep. So we're optimistic about continuing to follow the routes and find a lot more tonnage. So that's priority number one in terms of exploration. Priority number two, geological logic says, we've got this wonderful deposit.
That's an oxymoron, geological logic.
That's a much longer conversation, but yeah, it probably is. Anyhow, you got me going.
All right, let's say geology suggests.
Geology suggests, there you go, that this shouldn't be isolated, that there should be more. These are structurally controlled systems. We're in a highly faulted part of the Earth, the Taurus Mountains, and there's a lot of faults there. So the sort of mineralization systems that led to Panagazoo, we think should lead to more in the vicinity. So that's priority number two. We actually hold the property right next door to Panagazoo. It's a property called Akea, which
White stone, I think, isn't it, in Turkish? Yes.
Your Turkish is magnificent.
Well, just dredging it up from somewhere.
Yes, and so we hold that property, and that's a priority exploration target for us.
So you've got the roots, that's priority one,
Yeah.
and then you've got other Pinarga zoos in the area.
That's exactly.
And that's priority number two.
It took a long way time to say that, didn't I? But yes.
No,
that's
but
it.
you said it very succinctly, so it's easy to summarise.
Right.
So, but that sounds like a lot of drilling.
It is a lot of drilling.
And is that expensive then?
Yeah, drilling. This mining game and exploration is expensive.
Yeah.
I mean, that's the truth.
So a couple of $100 a metre, that sort of expense?
No. I mean, we've just come through a tough downturn, and actually exploration costs are have similarly come down as a result of that. Just to stay competitive. So it's a bit under 100 US per ton.
Oh, okay, right. And is that done by external contractors, or do you do it in-house?
We mix it up. We've got some ourselves and some external contractors, so we mix it up. Anyhow, but yeah, we've been doing about $1 million US a year in drilling. As I said, our focus in the last 18 months has been the mine development, and that's taken a lot of time, a lot of money, a lot of effort. But we've pretty much got that. It's never done, but we've got a large amount of that done. So now, what we'd like to do, we'd like to get back into the bigger picture, the exploration, and so I'd also be planning to try and step up the amount of money we spend on exploration going into next year. We haven't set that budget yet. We've actually got some budget meetings coming up on that in the next couple of weeks. But I'm hopeful that we'll spend at least double that in terms of exploration next year.
Yeah. So now the mine is running like a smooth machine for the next 18 months.
Right. And as I look at the financial performance next year, we'll do at least 60,000 tonnes of production again. I think the zinc price, we're forecasting the zinc price somewhere in $1.35, $1.40 US per pound, around 3,000 US per tonne. So I foresee, another strong financial year coming up. So that underpins us, that we can look at that and say, we have some confidence about that coming into next year. So it gives us some confidence to step the exploration up.
So does that mean in 18 months' time you have to sort of redevelop the mine and go slow on the exploration? Is it a sort of one and the other? You develop the mine, get it running smoothly, do some exploration, or is it?
No, that's more about how we actually built this mine. I mean, we built this mine in tough times, and we did it without debt. There's no debt. We've got no debt. We pretty much bootstrapped it, really. So we mine a bit, sell a bit, do a bit more development, do a bit more drilling, mine a bit more, so on. But it's now come to a point where it's very strong. Our Q3 financial results were very good, and I expect them to continue. So it's very strong. So we're now in a position to get it into a more normal level. But we had to do a lot of mine development to sort of catch up.
Yeah.
But I'm hoping now that I think we're in a much more normal, more stable level. We're not sort of in this mine a bit, develop a bit, mine a bit, develop a bit.
Okay. So now you can develop ahead of the mine, and the whole operation can proceed like a smooth machine.
We can actually do mine planning and project planning and budgeting, and it's wonderful. And and it's come fast, really. But yeah, it was tough because we bootstrapped it.
Yeah, and then the cash flow that kicks off, you can use for the exploration.
Yes.
Are there any thoughts as to a dividend at some point, or?
Okay, so back on the bootstrapping, not pretty much, all the cash was just going around.
Yeah.
But we're now in a position. Our profitability coming out of the mine this year is strong. So the partners, it's Turkish partners and ourselves, we've had conversations and we agree that at a certain point, the partners need to benefit from this. So I'm hopeful. We haven't made those decisions yet, but we're generating a lot of profit this year, which profit eventually leads to cash. So I'm hopeful and expecting that we'll start to dividend some of that cash into the partners next year.
And would that
As I said, we haven't made that decision yet, but that's where we're
that's the way the thinking is.
That's the way the thinking
is heading.
Yes.
Okay.
Yes.
And you're on the CSE in Canada.
Yeah.
Would that be an opportune moment maybe to upgrade to one of the other exchanges, or are you happy? Because it's always seen as a slightly junior exchange, isn't it, the CSE?
That's a bigger picture, and our objective is we'd like to build Pasinex into a mid-tier zinc company. We're looking at what next, where we go next, how we do that. This mine's going very well and making profit, and so we see the opportunity of taking that as a stepping stone and stepping up. Part of that stepping up is looking at where we go next in terms of our listing. So yes, we would definitely consider going to
in the fullness of time, or is
in
there
the fullness of time. I think the way I'm looking at it at the moment. Again, we haven't made these decisions, but we're certainly talking, thinking, as you said. I think that next year could be a big, strong year for us, and hopefully make some strong and right and bold moves that take us towards that vision of being a mid-tier zinc play.
And then you said you were at an exciting corner of the world geologically.
Yeah.
You're also at an exciting corner politically.
Yes.
Tell us a little. It would be remiss about me if I didn't ask you about the political situation.
Yeah, I mean, sure. I mean, when you're in the Middle East, politics at times can be challenging, and yeah, I mean, I don't need to explain that to you or anybody that's watching. All I can say is, what we have to do is focus on our knitting. We have to focus on what we're doing. We have to focus. We're doing some good things. We employ 250 people from the local community. We're profitable, so we're paying corporate taxes. So we just have to focus on our game, doing it good, and basically stay away from the politics. Be respectful, be correct with the officials. But just focus on our knitting, and I think that's what we do, and by doing that well, I think we get credit from the officials. So.
And are you able to completely stay away from the politics? I ask because some of your material ends up in Iran, doesn't it?
Yes.
And that that then brings in sort of other, I suppose, wider consideration, regional considerations.
Yes.
Is that a difficulty for you in any way?
Well. At the moment, no. But I mean, I would be remiss also if I sort of didn't say that. Could it be a issue? Perhaps. Yeah. I mean, obviously we're conscious of that. This year, I don't know, 70% of our product, approximately, don't hold me exactly to that number, but approximately went to Iran. The Iranians they've got a big zinc infrastructure in Iran, and they were desperate for feed. Yeah. And Turkey's right next door, so they were very competitive on pricing, and so they ended up buying about a bit over 70% of our product this year. Obviously, we're alert to tensions, and we're alert to political postulations. All I can say, it's the same. I mean, we watch it, we take note, and if that were to go the wrong way, then we'd obviously have to take that on board. Are there alternatives? Absolutely yes. And we're seeing, zinc is hot at the moment, and the market is desperate for zinc, and we're one of the people bringing zinc on right at the moment. There isn't a lot of new zinc out there, and we're one of the sort of go-to places. So we've been approached by, well over 40 groups wanting to buy our product, and quite a number of groups here in Europe. And so we definitely have alternatives, and we're also seeing the alternatives are getting quite price competitive. So we watch the situation, but I'm not too concerned. I think we do have alternatives if things were to go the wrong way.
Excellent, Steve. All right, well, I'm afraid that's all we've got time for, but thank you very much indeed. Enjoyed having you here, and tell us how things develop throughout the course of the next months and years. Keep us updated about that dividend, and of course keep us updated about that exploration as well, and in the fullness of time, about how you're thinking about the exchange that you're quoted on. So thank you very much indeed for joining us. Ladies and gentlemen, that was Steve Williams, the President and the Chief Executive of Pasinex, which is mining the Pinar Gazoo project in Turkey. Pinar Gazoo, as I said before, which translates as the eye of the well, but almost the eye of the tiger in this particular case. As I say, I'm afraid that's all we got time for, but this is me, Charlie Gibson, signing off for the Mining Show, brought to you on Core Finance by Blythe Way. We'll be bringing you more ideas, more thoughts, more mining opportunities, more investment ideas over the course of the next few days. So stay with us, and until then, you have a very capital day.